to apply.
A quick programming note. If you missed Jim Cramer's sit down with NVIDIA CEO Jensen Huang, you can catch the entire thing on CNBC Pro. Just head to cnbcpro.com/Huang or scan the QR code on your screen. Still ahead, we'll tell you what to watch when Dell reports in overtime. Closing bell, be right back. The broad market up about 0.25%.
Brain wellness.
We are getting some fresh news out of NVIDIA. Christina Partsinevelos is here with the details. Hi, Christina.
Hi, Mike. Never a dull day with chips. NVIDIA and Dell helping build a game-changing supercomputer called Doudna at Lawrence Berkeley National Lab, which is set to launch in 2026. And this is important as countries really race to build these powerful computing systems for national competitiveness. Doudna represents America's latest push to maintain its scientific edge. And what I mean by that is, unlike traditional systems that work separately, this supercomputer merges simulation, data, AI into one platform. They're going to be using Dell infrastructure architecture and NVIDIA's Vera Rubin architecture. It's really designed to tackle the Department of Energy's biggest challenges, from unlocking clean fusion energy to designing new superconducting materials and processing real-time data from space telescopes. So there's a press conference going on right now in California. Supercomputers, though, are important, have become critical national infrastructure, with China, Japan, Europe investing billions in next-generation systems. This new U.S. supercomputer really aims to compress years of discoveries into days, with the goal of maintaining, of course, America's position in the global race for scientific breakthroughs. Jensen Huang will be speaking at 3:50 in about 7 minutes, and he's going to have a press conference afterwards. We'll come with you with any breaking news from that. Mike?
All right. Yeah, we will absolutely listen up for that. Christina, thank you. Up next, we'll run you through what to watch from Costco and Dell when those numbers hit the tape in overtime. That and much more when we take you inside the market zone with the Dow just about at session highs, up 0.3%. We are now in the closing bell market zone. Pippa Stevens shares what's behind the swing lower in oil prices, plus two earnings reports out in overtime that we're watching. Christina Partsinevelos is back with Dell and Melissa Repko on Costco. So first, Pippa, a little bit softer crude prices today.
Yeah, that's right, Mike. So we did see oil dip as OPEC Plus members could decide to hike July production by more than 400,000 barrels per day when they meet this weekend. That's according to sources who spoke with CNBC International. Now, it would be the fourth straight month of larger than expected hikes, adding to supply just as demand concerns really started taking hold amid the trade uncertainty. On the heels of that, energy is the second to worst sector this year. And if oil stays in the low 60s, at some point, companies might have to start cutting the hefty shareholder returns investors have become accustomed to. Last year, the international majors paid out a record $119 billion. That's according to Rystad, with shareholder returns as a share of corporate cash flow from operations rising to 56%. Now, if this year's buybacks and dividends remain at 2024 levels, that ratio will top 80%, a level, Mike, that the firm called unsustainable.
Yeah, absolutely. That would perhaps be pushing the limits. And Pippa, in terms of the potential for OPEC to again kind of increase supply, what seems to be the motivation there? Is it just market share at this point?
It really seems to be that market share gain. Now, of course, the OPEC Plus overall has said it's about compliance with some of the members like Kazakhstan that have consistently been producing above their quota. But it really does seem to be more about market share when you read between the lines. The group has said that this is a very strong market, which all the data points suggest is really not the case at the moment, and that it's really an inopportune moment to start bringing back production. But after years of keeping more than 6 million barrels per day on the sidelines, some of the larger producers, of course, Saudi Arabia, that does have the lowest break-even cost, they seem to have said, you know, it's now too much. And so they decided that now is the time to bring back more production.
All right, Pippa, thank you. Christina, we got a little news on Dell before, but now we're looking ahead to the results.
Yeah, the numbers. And Dell's AI server businesses really has been booming thanks to NVIDIA's powerful chips, making their infrastructure solutions group, ISG, the fastest growing segment. Just last quarter, management said deals with XAI and others pushed Dell's server backlog to $9 billion. That backlog should continue to grow after Dell's manufacturing partner, Wistron, noted improved rack shipments just at Computex a few weeks ago, so that was a positive sign. However, Dell remains heavily exposed to traditional PCs and servers. Management said last quarter they're still waiting for this AI PC refresh cycle while consumer demand stays challenged. And HP Inc.'s earnings from last night reinforced this concern. They lowered their 2025 PC industry growth outlook due to uncertainty around consumer and commercial purchasing decisions, and that sent HPQ shares down 8%, you can see on your screen. So some people are wondering if that's going to be reflected in Dell's numbers. Dell's AI server strength, though, needs to offset continued weakness in their traditional PC server business when they report very soon. Mike?
That is, of course, their abiding hope. Christina, thank you very much. Melissa, Costco, obviously, it's been a very well-positioned company, been an investor favorite. What are we looking for in terms of the results?
Hi, Mike. Yes, when Costco reports quarterly earnings results today, Wall Street expects the company's revenue and earnings to be up year over year. For the Warehouse Club, known for competitive prices and bulk discounts, tariffs could help drive more customers to its doors and keep its membership sticky. Yet tariffs could also add costs, which could mean higher prices even at Costco. Best Buy CEO Corey Berry said earlier today that prices have already gone up on some consumer electronics. And earlier this month, Walmart warned of higher prices coming to its stores too. About a third of Costco's U.S. sales are imports, with less than half coming from China, Mexico, and Canada. Costco CEO Ron Vaccaris said on the company's earnings call in March. He said uncertain times tend to benefit the company since customers typically seek value. Wall Street's taken a rosy view on Costco, Mike. Shares are up about 10% this year, outpacing the S&P 500.
Yeah, and certainly, Costco's valuation is also quite a premium to the rest of the space. It is interesting, their comments about how obviously their customers seek value, and Costco kind of culturally and by strategy has always kept its own margins relatively low. I wonder if that means they'll have to shoulder more of the costs and just hope that they make it up on the memberships, or how that might play out.
That's a very good point. One advantage that Costco has here is that it could pivot away from categories that are more exposed to tariffs. It has a lot of treasure hunt type items in the middle of the store. And so, for example, if certain categories like toys are more exposed, it could switch to another supplier, it could switch to other kinds of merchandise, and that gives it some flexibility.
Right. And then, we've actually had this full week of retail results. You mentioned some of what people have said about pricing. What has been the main takeaway about the state of consumer appetites right now?
One thing that struck me, Mike, is just the similarity to the last few quarters. We're just hearing about this consumer who remains more selective about their spending. It's been a recurring theme ever since inflation. Now it's for a little bit of a different reason, with tariffs being a fear of consumers and potentially some uncertainty about whether they'll be paying a higher bill. But it's been much of the same when it comes to retailers contending with a really choosy shopper.
Yeah, and I guess just given where expectations had gotten down to in April, maybe more of the same is pretty comforting, at least for the moment. We'll see how it develops from here. Melissa, thank you so much. Appreciate it. We're coming up on 1 minute to go into the close. You see the major indexes there sitting on gains of more than 1/3 on the S&P 500. The NASDAQ has been the leader all day, up 0.4%. Did weather a little bit of an intraday pullback, but we are firming up into the close. NVIDIA is on track to be up a little more than 3% on the day. That is a few percent below where it did open. Its high of the day was 143.49. We're at around 139 at the moment. So that does continue a pattern of a little bit of a sell the news response. Market breadth has been positive all day. Twice as many stocks up as down on the New York Stock Exchange. So the average stock outperforming the big cap indexes in general. And also Treasury yields have managed to come in just a little bit. Slightly softer weekly jobless claims this morning, and then a pretty good 7-year Treasury auction has helped on that front. Would also just mention the volatility index is still hovering around 19, even though we had a pretty quiet session with firm indexes, most stocks up. The market is still on alert for the possibility of, who knows, maybe more trade headlines. That is the end of regulation. We are going to send it over to John Ford with Overtime.
That's exactly what that bell means. Exponential Fitness ringing the closing bell at the New York Stock Exchange. FCM Enterprise doing the honors at the NASDAQ. And it was a positive day on Wall Street with stocks edging higher after a midday drop. The Dow had been down 270 points. NVIDIA closing in the green but off the highs. The tech sector moving along with it. Micron and Broadcom among the top performers. Retail in focus too. Best Buy plunging on a revenue miss. That company cutting full year profit and sales guidance. Kohl's also lower despite a narrower than expected loss. Bath & Body Works in the red on a weak outlook. And on the flip side, e.l.f. Beauty posting its best day ever on earnings, up about 24%. Boeing hitting a 15-month high as the CEO says production is getting ready to ramp up earlier than expected. And Salesforce, the worst Dow performer, despite a strong report, the stock getting five price target cuts today, down a little more than 3, and HPQ, the worst performer on the S&P following disappointing results. Well, that's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford. Morgan Brennan is on assignment. Another big hour of earnings is coming your way. Got Costco, Gap, American Eagle, Ulta Beauty, all expected. And on the tech side, Dell, Marvell, and Zscaler are going to bring you all those reports as they break. But first, to the White House, where a U.S. appeals court is now weighing in on the president's tariffs. Megan Casella joining me now. Megan.
Hey, John, that's right. Some breaking news just in the last hour that the Court of Appeals for the Federal Circuit is granting the administration's request for an emergency stay. Essentially, what this means is that at least temporarily, all tariffs can remain in place in spite of that ruling just last night. Now, the counsel for the plaintiffs already out with a statement saying they believe this is merely a procedural step and that ultimately they are confident that the Federal Circuit will deny the government's motion and allow the ruling to move forward, which would mean the tariffs, at least many of them, would have to be lifted in the meantime. Now, this is all temporary. The plaintiffs have until June 5th, 1 week from today, to respond. Then the court will ultimately decide again on that longer term stay. The White House, this is a win for them, but they're also sort of seeming unbowed here, knowing that they have some other options if this one doesn't prove successful for them. Take a listen here to White House Trade Advisor Peter Navarro just out here on the driveway a few minutes ago.
The court told us, they didn't all but tell us, they told us, go do it another way. So you can assume that even if we lose, we will do it another way.
So looking for other options that they know are out there if they need to find them. Then finally, John, one other piece of news here from the White House today is Federal Reserve Chairman Jay Powell was here meeting with the president at the president's invitation. The Fed saying in a readout after that meeting that the two men discussed growth, employment, and inflation, but that Powell did not discuss any expectations for monetary policy, except essentially to say that the Fed will remain data dependent as always and focused on its dual mandate. We also
also heard from the White House after that that the president told the Fed chairman personally and directly in this private meeting that he believes it's a mistake not to cut rates. So both men sort of having a chance there to air privately a lot of what we've heard from both of them publicly. John?
All right. You always ask the tough, fair questions and do it respectfully. Looking forward to more coverage. Megan Casella, thank you. So should a change in tariff policy change your investing strategy going forward? Let's bring in Neuberger Berman, President and Chief Investment Officer, Joseph Amato. Joe, I know you like small and mid-sized companies here, but with these macro conditions, it can be hard to invest, no?
Certainly, the macro conditions have kept our heads spinning in just this last couple of days with the latest tariff news. It feels like we're still going to be moving into a period where tariffs are going to be an issue. And if you end up with a tariff rate that's in the high single digits, I think it still has an ability to weigh on growth and push up inflation a bit. But I think some of the more worrisome tariff levels that were announced in early April seem to be a bit off the table. And I think that sort of left tail risk has been taken off. And that's partly why we've seen the market bounce back.
Do you have any expectation, should investors have any expectation that in a way this takes off some of the pressure for countries to negotiate quickly? Because, boy, I mean, it's kind of like that situation with the law firms. Maybe if you do a deal too quickly, then you figure out the pressure that was put on you wasn't exactly legally sound. You wish you hadn't.
Yeah, it feels like the administration does have different pathways to put tariffs in place that would still keep pressure on other countries to push forth on getting a deal done. But if I were another country right now, I probably would take a step back and want to have a bit of a wait and see attitude as to where things actually come out in terms of the president's ability and the administration's ability to impose these tariffs.
How do you play emerging markets then?
Well, emerging markets is, there's a wide swath there. There's China, there's India, there's, Latin America. So it's hard to generalize broadly. We have generally been more constructive on developed markets. Earlier in April on the big pullback, we upgraded global equities primarily driven by developed markets outside the U.S., which had been a significant underperformer over the last couple of years. So we think some of the initiatives in Europe, for instance, where they're putting in place more significant fiscal stimulus to their economies is going to be helpful. There's also a relative valuation differential between the U.S., so we think that's where we would lean emerging markets right now. If you look to emerging markets for growth, but growth is slowing down in a number of those markets. And in India, valuations are pretty expensive. So right now, we'd probably lean more into value-oriented markets outside the U.S.
Hold tight. We got Dell results out, and that stock is popping. Christina Partsinevelos has the numbers. Christina?
What we're seeing is the company missing on earnings, but managed to beat on the top line. The drag really came from its infrastructure solutions group, which is their data center business. That pulled in about $10.32 billion, falling short of estimates. But it's the guidance for the road ahead that is bullish and pushing shares up 9%. They're calling for Q2 revenue of $29 billion at the midpoint, which is way above the street's $25 billion estimate. On the earnings side, where they're projecting $2.25 per share versus the $2.09 consensus, also much higher. The big bump because of the $7 billion in AI server shipments they're going to do in Q2. That's more than expected, flushing nearly half of their Q1 backlog. For the full year, Dell's sticking with their revenue outlook, but bumping up their EPS target to $9.40, which is really just a stark contrast from competitor HPQ's earnings just last night. Shares up over 9% on that bullish guide. John?
All right, we'll keep watching it. Christina, thanks. Now, American Eagle earnings are out as well. Gabrielle Fonrouge has the numbers. Gabrielle.
Yeah, American Eagle reported an adjusted Q1 loss of 29 cents per share. That's a miss on estimates of 22 cents on $1.9 billion in revenue, in line with consensus. Comparable sales were down 3%, and merchandise margin tumbled by 960 basis points. That drop in margin is largely from inventory write-downs, discounting, and higher product cost. American Eagle already withdrew its full-year guidance, but the second quarter guidance it gave today was weaker than consensus. In a news release, CEO Jay Schottenstein called the quarter challenging and said it's disappointed by the results. John?
All right, Gabrielle, thank you. Joe, what do you do with retailers here? There's such a broad swath of different impacts. It seems like if you're in grocery and you're dealing with stuff coming out of Mexico and Canada, mostly it's one thing. But if you're dealing with apparel and a lot of your stuff is coming from China, that's something different.
Yeah, I think it's going to be a challenging time for consumer-related businesses. Although, when you look at the underlying consumer behavior and activity, the consumer has been surprisingly resilient, right? Labor market is relatively strong right now and hanging in there, and that's really led the consumer to hang in there. Now, as you start to see the impact of tariffs and higher costs, which we think will be in the data as you get further into June and then into July, that's going to be the true test of how resilient the consumer is. But I think the example of the two earnings reports you guys just talked about is the kind of dispersion that we're seeing and dispersion we expect over the next few quarters, right? You're going to have some companies that are able to withstand it, whatever sector they're in, and other companies that are going to have a challenging time.
How concerned should investors be about the pull forward in supply that comes perhaps from these 90-day tariff windows and the ongoing impact of some of these credit effects, student loans getting called in again, some credit scores dropping and people having higher costs on that end, perhaps not having enough to spend?
I think one of the things that's going to lead to continued volatility in markets and individual stocks is going to be a lot of the distortions in economic data, right? We're seeing that already. Look at the first quarter GDP number, right? You had a huge swing in exports that led to a negative GDP. Now, there weren't the traditional conditions of a negative GDP quarter, right, which is more like a recession. So, we expect that whether it's inventory levels being pulled forward or pushed out, pricing that's going to be affected by some of the chaos that's been created by the tariff situation is going to, I think, present a lot of opportunities, but also some risks and a choppy market environment. So we expect until you get greater clarity, particularly from companies and their guidance, and they need clarity on the tariff situation, I think you're going to be in a trading range and trade sideways for a while. All
right. Joe, thanks. Joseph Amato from Neuberger Berman. Meantime, Ulta Beauty looking its best here in overtime. Its numbers are out. Melissa Repko, what's going on?
Hey, John. So Ulta Beauty's numbers are out, and it beat on the top and bottom line, and it raised its guidance slightly for both sales, same-store sales, and for earnings. So good news all around and a little bit better than expected. It reported same-store sales up 2.9%, much better than Wall Street expected. In terms of the top and bottom line, earnings per share came in at $6.70 compared to the $5.81 expected, according to LSEG, and revenue of $2.84 compared to the $2.8 billion expected. It now expects same-store sales to be flat to up 1.5%. Previously, it had expected same-store sales to be flat to up 1%, John.
All right. Melissa, thank you. Are we going to do Marvell next? Yes, those numbers are out. Christina Partsinevelos back with those. Christina.
We are going to do Marvell. It's a custom chip maker. What we're seeing, EPS 62 cents, 1 cent beat on revenues of $1.9 billion. Also a little beat. Talking about the Q2 guidance, we'll say it's a beat, but it's not by much. 67 cents adjusted EPS. That's what they're projecting. Q2 revenues of $2 billion, slightly higher. So you can see the shares are now just like oscillating between negative and positive. For the data center revenue, in line for the quarter Q1. And their gross margins, that was the only thing that really stood out for me. Gross margins in Q1, 59.8, slightly less than what the street was anticipating despite the earnings beat. They did say that the momentum is being fueled by strong AI demand in data center for the second quarter guide. Keep in mind, Marvell does design chips for AWS. Hopefully we'll hear more about that relationship because there's been some concerns. Shares now dropping almost 2%. John?
All right. Christina, thank you. Also, C3 AI today popped about 21% after results yesterday. They beat on the top and bottom lines and a solid guide. Stock is heavily shorted, so that factors into the extreme reaction. I spoke with co-founder and CEO Tom Siebel today about the quarter, the Microsoft partnership bearing fruit, and his decision years ago not to do AI business in China.
So I think we have the largest ecosystem of distribution partners in the world. We have the largest family of enterprise AI applications of any software company in existence. So I think we're well positioned to continue to grow and establish a really substantial position in enterprise AI globally. And today we do not do business in China, and I feel very, very comfortable with that decision. We're engaged in basically open warfare as it relates to AI with China, and we have chosen our side. Okay, and we're choosing the side of freedom, liberty, and democracy, and we're supporting those governments.
That is Tom Siebel, and lots of other earnings coming our way, including Zscaler, which we are going through. That stock popping initially. We're ready with it. Pippa Stevens, you have those numbers?
Hey, John, top and bottom line beat here for Zscaler, EPS of 84 cents adjusted. That was ahead of the 75 cents Street was looking for. Revenues at 678 million, also a beat. Billings came in well ahead of estimates. Now, on the guidance front, it was decent on earnings, but was a little bit light on the revenue side of things. Now, the cloud cybersecurity company did also announce a new chief financial officer. You see there the stock got better than 3.5%. John?
All right, the cyber names keep coming out. We got Rubrik and CrowdStrike coming up later on Overtime, too. Not today, but soon. Well, we've got a lot more to come, especially in retail. Got Gap and Costco, both expected out in the next few minutes. We're going to have those numbers. And Dana Telsey is going to be here to give analysis. Overtime's back in 2.
.com/shaving.
Welcome back to Overtime. Gap earnings are out. Shares are tanking down about 12%. Gabrielle Fonrouge back with those numbers. Gabrielle.